6 Benefits of investing in multifamily properties. Investing in multifamily properties can be a great way to diversify your portfolio and generate passive income. 1. Cash flow. First and foremost, cash flow provides investors with a consistent stream of income. By renting out multiple units within a multifamily property, investors can generate rental income monthly. This steady cash flow can help cover various expenses, such as mortgage payments, property management fees, maintenance costs, and even provide a return on investment. The ability to generate regular cash flow allows investors to maintain the property's operations and profitability in the long run. Moreover, cash flow in multifamily properties offers a certain level of stability and resilience. Even during economic downturns, people still need housing, and rental demand remains relatively consistent. This stability helps mitigate the risks associated with fluctuations in the real estate market, making multifamily properties a reliable investment option. 2. Easier to finance. Investing in multifamily properties has many benefits, one of which is that it is easier to finance than other types of real estate investments. This is because multifamily properties are considered commercial properties and are therefore eligible for commercial loans. Commercial loans are typically easier to obtain than residential loans because they are based on the income potential of the property rather than the creditworthiness of the borrower. This means that even if you have a less than perfect credit score, you may still be able to secure financing for your multifamily property investment. 3. Lower vacancy rates. The worst part of real estate investment is a long period of waiting before you could find a good buyer, tenant. This results in frustration and financial loss for the investor. Multifamily properties tend to have lower vacancy rates than single-family homes because they have multiple units. This means that even if one tenant moves out, other tenants are still paying the rent and you're less likely to experience long periods of vacancy and lost rental income. 4. Economies of scale.